Good morning. We'll get started in a few seconds. Good morning, everyone. Welcome to our 2025-26 Fiscal Basics Training. Today is day one of our training. Because there is so much around the fiscal components of federal programs, we actually need 2 days to cover all the material. Day two will be next Wednesday, December 10th, at the same time, excuse me, as today, 10 o'clock to 11:30. I'm Adrienne Balcazar, and I would like to introduce the LCAP-State and Federal Programs Unit. Joining us from the team is Helen Choi,
Good morning.
Laurel Estrada,
Good morning.
Augustine Garcia,
Good morning, everyone.
Rachel Garcia,
Good morning, everyone.
Anita Lomali,
Hello, everyone.
and new to our team, Tina Park.
Good morning, everyone.
Also joining us from our support staff is April Grease.
Good morning.
And Susanna Mendoza.
Good morning.
To access today's presentation, we ask you to please click on the link in the chat. The presentation can also be accessed through the link on the slide. If you click on the icon as shown here, the agenda and the resources are also available as well. You can access the resources. We are recording today's meeting, and we will be posting the link for this very soon. Also, the Q&A can be found here once we post it. We want to let you know of a new resource on our Canvas webpage. We are providing e-learning modules, and when you click on the e-learning button, you will find modules on specific topics. Today, we will be converting today's Fiscal Basic Workshop into e-learning modules for a quick reference, and we will be posting it here. So in addition to our complete video copy of our presentation, we also will be breaking it up. So in case you want to go specifically to a specific topic, or if you have someone that's new and you want to just share that particular module, you can do so through this. In addition to today's presentation, we have additional resources to support your work with the fiscal oversight of your federal programs. We have two that are available for purchase, and one is on the fiscal fundamentals and the other one is on time and effort reporting. We have updated them again with the fiscal fundamental guide and the time and effort reporting materials. You can find the ordering information at the link on the bottom of this slide. Today, we will focus on the introduction to federal programs, the federal cost principles, the cost allocation terminology. We'll take a look at federal timelines, the federal cash management system, and then we'll make sure that everyone has a deep understanding of internal controls and policies and procedures. Please place your questions in the chat box and we will answer any questions that we can. And we will follow up with the written responses in a Q&A that will be emailed to everyone who is registered, but it also will be posted on our Canvas page. So let's begin today's session with an introduction to federal programs. When you receive federal funds, there are legal assurances that your superintendent signed. The agreements are important for you to know and fully understand because these are the strings attached to each program. There are also regulations that we are going to talk about today. These regulations are based on the presumption that the LEA is responsible for ensuring the proper use of funds and to ensure that there is no waste, no fraud, or abuse within your federal programs. This is the foundation to why you must have your system of internal controls in place. The specific purpose of these 2 days is to provide you with an overview of the fundamental requirements, primarily for federal programs, and then also to give you the source of these legal requirements. We want you to understand how the systems must be in place to address these requirements. We also want to make sure that you are aware of all the reporting requirements so that you don't have anything come back to you in a negative way. And also clarify some of the differences and similarities of state and federal program fund requirements. And lastly, we want to support you in the understanding and to show the intersection of the program and fiscal requirements. Many of you here today may be from the program side of the federal programs. However, if you are the one responsible for the state and federal programs, many of the requirements that you oversee include fiscal operations. So it is important that you know that all of the fiscal requirements are also part of your job. You will see throughout this presentation that fiscal and program requirements are interrelated and that communication is so critical between the program and fiscal folks and in implementing compliant federal programs. Implementing your federal programs must be a team effort. And this is because fiscal staff processes payments, but program staff need to be involved in determining the allowability. Fiscal staff track and report grant expenditures, but the program staff make decisions about the spending and need to be aware of all the timelines. Both the program and fiscal staff need to follow district procedures of purchasing. Program staff need to review the charges to make sure they are charged to the correct program accounts. And this is all to minimize any risks of the LEA not meeting their oversight responsibility of these public funds. These are some of the documents we will be referencing today. ESSA is the current authorization of the Elementary and Secondary Education Act that forms the legal basis for most of the federal programs. This is the statute. Then we have the Uniform Grants Guidance, and this is another name for the Code of Federal Regulations, which includes requirements for all federal education programs. We also are going to take a look at the CSAM, which is the California School Accounting Manual, which is the state's guidance for fiscal accounting and determinations. And we have the EDGAR, and EDGAR stands for the Education Department General Administrative Regulations. And this is a handbook that's based on the Uniform Grants Guidance, and it provides additional requirements and clarification for programs operated by the Education Department. There are multiple sources of rules for federal program funds that must be followed. Federal programs are typically the most restrictive because the requirements have a specific purpose and use. First is the statute. For most LEAs, these are contained in the Every Student Succeeds Act, or the ESSA, and are based on legislation. These and all other federal programs are subject to the Code of Federal Regulations or the Uniform Grants Guidance. In some cases, state law will also add additional requirements. So in California, Ed Code can be another source of legal requirements for some federal programs. Next are the regulations. The Code of Federal Regulations is set forth by the Office of Management and Budget. The OMB governs all federal programs, and Part 200 applies specifically to federal education programs. EDGAR provides additional detail on some of these requirements, and the California Code of Regulations should also be referred to because this codifies CDE's guidance related to some federal and state programs. Let's review some important facts about statutes. Statute simply means the law that establishes or authorizes the program. Title I, II, III, and Title IV are sections of ESSA and describe the program requirements for each of these programs. They typically begin with the intent and the purpose of the statute, which sets the groundwork for the law. And this will tell you who is meant to benefit and what is the program meant to accomplish. and it's important to understand the difference between each of the federal programs. Some programs include specific lists of allowable costs or activities, such as Title III, and include both required and allowable activities. Others, like Title I, will provide guidance on the parameters for determining the allowability of costs. The statutes are specific to individual programs, so one does not apply to all. You need to know the exact statutes for each of the programs. California Education Code also includes some provisions related to federal law and such as the process for developing Title I's school-wide plans. And lastly, the Uniform Grants Guidance or Code of Federal Regulation is applicable to all federal education programs. Now let's take a look at reviewing regulations. Regulations are developed by oversight agencies. The rules are codified in the regulations. As explained earlier, the OMB is responsible for publishing regulations for all federal programs. The CFR, Section 2, Part 200, includes regulations for all federal education programs. Remember, this is also referred to as the UGG or Uniform Grants Guidance. The Education Department General Administrative Regulations, also known as EDGAR, are based on the Code of Federal Regulations and provide additional detail on certain requirements. 34 CFR Part 75 addresses the direct grants, and Part 76 addresses state administered programs. The GEPA, or the General Education Provision Acts, 34 CFR Part 81, these are regulations governing the enforcement of legal requirements that are required for covered programs. And the California Code of Regulations, 5 CCR, is the codification of the general and permanent rules and regulations announced in the California Regulatory Notice Register by California state agencies under authority from the primary legislation in the California codes. We want to inform you about the updated UGG, therefore, and also the EDGAR. They had been updated last year. So here you will find the links for the revisions as well as links for the Uniform Guidance FAQ and guidance for federal financial aid, financial assistance. Remember, these updates are now in effect as of July 1st, 2025. So it's important that you have the latest. This graphic is helpful in understanding the purpose of the funding sources specific to the LCAP, the SIPSA, and the LCAP Federal Addendum. And as you can see, how they work together. Starting with the bottom, LCFF base, this is for basic services for all students, including ethnic and students with disability student groups. And this is to meet the LEA's goal in state priorities. The LCFF S&C are additional funds with the requirement to ensure that low-income foster youth and English learner students receive increased or improved services. Title II and Title IV are district-level funds intended to supplement the LEA's professional development and to ensure a well-rounded education for students. Title I are supplemental funds and services for students at risk of not meeting the academic content standards. Title III is supplemental funds and services for English learners. You will also notice that the Ed Relief and ELOP and the LREBG funds are also included. These funds are outside of the state's LCFF funds and federal program funds, but this is because the specific use of these funds differs and in some cases can be broader than most federal or categorical funds, but still require adherence to federal requirements because they're state-restricted funds. Let's start with two basic terms that are important to the funding. They are unrestricted funds and restricted funds. Unrestricted funds refer to funds that come without legal constraints and can be used for any purposes not prohibited by law. Restricted funds are, on the other hand, are subject to constraints that may be imposed by the provider of the funds or by legislation. According to CSAM, if a combination of restricted and unrestricted funds are included in a program, then by default, they are accounted for as restricted. So time and effort may apply, and any other type of federal requirements may be applied. Unrestricted funds are typically referred to as general funds and are the LEA's main operating budget. While they are unrestricted, LEAs are subject to requirements and obligations that must be met using these unrestricted funds. Unrestricted funds are used to implement the core or the basic program services for all students. And this includes requirements supporting equity and civil rights requirements such as ELD. LCFF is a bit of a hybrid program which is in part explains why it can be confusing. LCFF funds are all unrestricted funds, so they can be used for any cost not prohibited by law, but LEAs have an obligation to provide increased or improved services for the low-income foster youth and English learners if they generated those additional funds in proportion to the additional funds they generated. So while the funds taken as a whole are unrestricted in that they can be used for any legally allowable purpose, the obligation to meet this requirement remains. Let's take a look now at restricted funds. These are funds that are constrained by law, regulation, or restrictions that might come with the funds by the entity that is providing these funds. And they may apply to private or community-based organizations, private donors, local government, state restricted and categorical funds, federal formula, or competitive grants. So remember I said earlier, there are strings attached to the money. How does the state and federal government assure that there is no waste, fraud, or abuse? Well, it's through the monitoring process. And here are some of the ways you will be providing evidence when you participate in any of these monitoring activities. First, there is my personal favorite, the Federal Program Monitoring, also known as FPM. This is the state's process for meeting their responsibility to monitor federal program requirements at the local educational agency level. It also includes some state restricted programs. LEAs selected for review are often based on risk assessment. There are also state audits, and these annual audits of state-funded programs are conducted by outside auditors based on the requirement in the State Audit Guide, which is updated annually. And then there are federal audits. These are conducted in conjunction with the state audit process. The guide for federal audits is the Compliance Supplement, which is updated annually by the Office of Management and Budget. You can follow this link for the 2024 OMB Compliance Supplement. And due to the current status of the U.S. Department of Ed, what is here probably will stand until further notice. And then lastly, there are Inspector General audits, and these are conducted by the Federal OIG for Education. They are usually based on issues identified as possible misuse of federal funds. And this too is probably placed on a hold because there's probably no one in this department right now. Now that we have gone over the overview of federal programs, I will now turn it over to Augustine, who will cover cost principles.
Thank you, Adrian. Good morning, everyone. So let's go ahead and dive into these cost principles. So you'll find these principles in section 200.400 of the Code of Federal Regulations. The link on the slide will take you directly to the U.S. Department of Education's website, where you can view the uniform guidance found in 2 CFR Part 200. This section lays out the uniform administrative requirements, cost principles, and audit requirements for federal awards made to non-federal entities. The cost principles in 200.400 are especially important for anyone who works with federal programs. especially those reviewing or approving expenditures. These principles help determine whether a cost can be charged to a federal award and that every requirement is met for a cost to be allowable. So cost principles essentially give us the rules of the road for determining allowability. Monitoring offices and reviewers rely heavily on these principles to guide what they look for. It's also important to remember that this guidance applies to all federal grants. So cost principles are your first stop when determining allowability. After that, you also need to check the specific requirements for each individual grant. So with that in mind, let's take a closer look at these principles. So what are cost principles? 2 CFR 200 subpart E covers the cost principles that set the parameters for determining whether costs are allowable under federal awards. For both recipients and subrecipients, whether you receive funds directly from a federal agency or from a pass-through entity, these principles guide how fixed-price contracts and subcontracts should be priced. They apply across many different federal programs. Let's take a look at CFR 200.400, which outlines the core premises behind the cost principles. This section of the policy guide outlines the responsibilities of recipients and subrecipients, it's often our LEAs, when it comes to following the cost principles. It establishes the foundation for what's required. The guidance assumes that recipients and subrecipients manage federal funds in alignment with federal statutes, regulations, and the specific terms and conditions of each award. It also assumes the use of strong management practices, meaning funds are handled efficiently and effectively, and that organizations use consistent accounting methods and maintain adequate documentation to support any cost charged to a federal award. The guidance also clarifies that following cost principles shouldn't require LEAs to overhaul their systems. Instead, their existing systems should already support strong internal accounting practices and provide the documentation needed to show that expenditures are allowable. In other words, the federal law doesn't tell you how to build your system, it tells you what those systems need to accomplish. Continuing with the LEA's responsibility, here we see that the policy addresses accounting practices that must consistently apply those cost principles when reviewing, negotiating and approving cost allocation plan, or indirect cost proposals. Furthermore, the policy presumes the LEA recognizes the dual role of students as both trainees and employees when educating and engaging students in research tied to the completion of federal awards for research. Finally, the policy presumes the LEA is not earning or keeping any profit from federal awards unless explicitly authorized by that award. The application of these cost principles should require no significant changes in the internal accounting policies and practices of the recipient and subrecipients. This slide here, it lists the basic factors of allowability included in the cost principles. We've highlighted necessary, reasonable, and allocable in red because these three carry the most weight when determining whether a cost is allowable. They're also the ones that most often raise questions during reviews. We'll walk through each one of these in more detail on the upcoming slides. So while all factors must be met, these three tend to require the most thoughtful consideration. For Title I, it's especially important to understand how the cost principles interact with program requirements, such as the fiscal tests for supplement, not supplant. Some of the other items on the list may seem straightforward, while others need a bit more explanation. But here's a key reminder. For a cost to be allowable, it must meet the cost principles and the specific requirements of the federal program itself. And across all of these principles, the LEA has the overarching responsibility to ensure compliance. Let's start with that first factor, necessary. For a cost to be allowable, it must be necessary for carrying out the grant. In other words, the cost must directly support a program objective. This is where many allowability issues start, because to determine whether something is necessary, you first need to know exactly what the program objectives are. So you'll often hear questions like, can I spend money on, and fill in the blank, right? When answering these questions, the key is to ask, why are you considering this cost? What program objective does it support? And where is that objective defined? To determine necessity, you must be able to show how the cost aligns with achieving the program's objectives. In some cases, program objectives are outlined in different school or district plans. For Title I school-wide programs, the SIPSA is especially important. It lays out the objectives and the strategies to meet those objectives. When determining if a cost is necessary, the SIPSA should clearly show the connection. And this is why the SIPSA must be clear, specific, and well-developed. The core principle of reasonableness, it asks, would a prudent person pay this much for this item? Federal guidance directs LEAs to consider several factors when determining if an expenditure is reasonable. And here are some key points when determining reasonableness. Number one is market price and prudent procurement. Is the cost comparable? Is the price for the goods or services similar to what others are paying in the market? And are you avoiding preference? Did you choose a vendor responsibly? Or did you show preference, potentially overpaying when a better deal was available elsewhere? Two is ordinary and necessary. Is the item essential? Is the cost recognized as ordinary and necessary for the proper and efficient operation of the program? Is it too expensive? Could the program's objective be met with a less expensive, more modest item? For example, a standard computer instead of the top of the line model. And three, following internal procurement. Did you follow your own rules? Did the LEA follow its own written procurement procedures, or did you choose a vendor without proper due diligence? Failing to follow internal procedures is a common cause for compliance findings. And for reasonableness and administrative costs, for federal programs that don't have a set legislative cap on administrative costs, like certain funds in Title II, exceeding a certain percentage in the Consolidated Act will trigger a reasonableness review. So when we look at reasonableness, we use what's called that prudent person test. And this means asking whether a reasonable, careful person, given the circumstances at the time, would decide that that cost is appropriate. Circumstances matter, as you know. So for example, during COVID, shortages made certain items more expensive. In that context, higher prices may still have been reasonable. The key is determining whether the cost made sense under the conditions that existed or whether it was excessive. A prudent person uses good judgment and makes thoughtful, practical decisions. The same standard applies when deciding whether a cost is reasonable for a federal program. It's also essential to document how the prudent person test was applied, especially for expenditures charged to a specific program. Clear documentation supports the determination that the cost is both reasonable and allocable. Now let's move to another key principle, allocable. A cost is allocable when the LEA can demonstrate that the cost directly benefits the program that's paying for it. A helpful guiding question here is, why should this program's funds pay for this item or this service? For example, does the cost support the strategies designed to address low-performing students or close those achievement gaps within a specific program? If the answer is no or it's unclear, then the cost may not be allocable. The principle is especially important when looking at direct administrative costs, multi-funded positions, or other shared costs. In these cases, duty statements and time and effort documentation must clearly align with the program objectives in order for the cost to be considered allocable. The criteria for allocability are outlined in CFR 200.405, which provides detailed guidance on how to determine whether a cost can appropriately be charged to a federal program. We'll wrap up the cost principles by looking at the section of the CFR that covers selected items of cost. This section here provides an A through Z list of 55 specific cost items and explains the principles used to determine whether each item may be allowable. Examples include advertising, memberships and subscriptions, maintenance and repair, and travel. It also covers compensation, and this is where you'll find the standards for documenting personnel expenses, including references to time and effort reporting. It's important to remember that these principles represent only one factor in determining allowability. Even if an item appears in this section, it still must be evaluated in the context of the specific federal program, the terms and conditions of the grant, and any additional program requirements. In other words, the selected items list helps guide decisions, but it doesn't replace the need to consider the full program requirements. LEA should review the selected items of cost as a part of their allowability determination. Some cost items have a clear yes/no guidance, but many fall into gray areas where judgment and documentation are essential. Also note, this list is not intended to be comprehensive. If a cost does not appear in the regulations, that doesn't automatically mean it's allowable or unallowable. Instead, decisions should be made on how similar or related cost items are treated within the principles. With that in mind, let's take a look at one example. All right, let's take a look at one example from the selected items of cost, 200.438, entertainment. This one is very straightforward. Entertainment costs such as amusement, diversion, social activities, and any related expenses are unallowable. The section does include an exception for situations where entertainment costs have a specific programmatic purpose and are included in the approved federal budget or receive prior written approval from the federal awarding agency. However, in practice, we haven't seen situations where entertainment costs legitimately meet a programmatic purpose, and because of that, entertainment should not be charged to federal funds. The same idea applies to prizes or challenge awards. These costs would have to be specifically included in the federal award and tied to a clear programmatic purpose. That concludes my section. I want to thank you for your time. Now we're going to shift into cost allocation terminology.
Okay, well, thank you, Augustine. And now that we've heard about some important overarching principles that guide federal awards, we're going to take a moment to define cost allocation terminology. In this section, we'll be going over the terms listed here and providing you with a definition and some examples for each. So let's begin with direct costs. Direct costs are defined in the Code of Federal Regulations, Title II, Section 200.413. Direct costs can be identified specifically with a particular program and cost objective, hence making them allocable. Direct costs may be instructional, such as a teacher and curriculum provided for an intervention program, or administrative, but only if certain conditions are met, and these conditions will be discussed in an upcoming slide. Direct costs are expenses that provide measurable and a direct benefit to a particular program, and these can include costs that relate directly to instructional programs and also to support expenses that relate to the auxiliary services necessary to maintain the instructional program. Examples of direct costs can include salaries and benefits of teachers and instructional aides, payments for textbooks, instructional supply purchases, and pupil service costs. For example, counseling, health services, and pupil transportation. And lastly, direct costs must be associated with specific program codes because they must be directly traceable to a program from which it is funded. Some typical examples of direct costs fall within the following categories: compensation, including salaries, wages, and fringe benefits of personnel working on the program, award, or the grant. The cost of trainings or professional development essential for the program. Cost of materials and supplies necessary for the purpose of the program, and equipment that may be needed to be purchased specifically to benefit and to be used in the implementation of the program. And just a reminder that equipment costing $500 or more must be inventoried and tracked. Associated with direct costs are direct services. And when defining direct services, it's critical to note that direct services are typically delivered at the school site. Direct services occur when the student is the direct recipient of the service or the beneficiary of the service provided through things like professional development or parent involvement. Direct services may be provided to students by personnel such as teachers, specialists, resource teachers, school nurses, school librarians, and instructional aides. Equipment such as computers and/or software may be a direct service to students if they meet the educational needs of eligible students as supported by student data and effective practice. So, how would one go about determining what qualifies as a direct service? Expenditures for personnel or services are justified as a direct service when the following are true. Personnel are providing direct, hands-on instruction to students. The services provided are integral to the instructional program, so much so that in its absence, the quality of the instruction itself and the academic success of students would be adversely affected. Funds are used to purchase instructional materials and equipment to be used by the eligible students, and funds expended support the analysis and use of student performance data that is then used to inform instruction for the eligible students. If you can answer yes to all of these questions when trying to decipher whether a service is a direct service to students, then you can feel justified in your expenditures and your decision. Next, we have administrative cost. Expenses that are administrative in nature and support the management of a program are considered to be administrative costs. Often, these might be referred to as overhead and are expenses affiliated with program administration. These costs may be placed in one of two categories, direct or indirect, depending on how they are described in the law. For example, salaries of program administrators who conduct program monitoring, prepare program plans, and purchase program specific equipment and supplies may be considered direct costs if allowed under the specific program or federal award. Indirect administrative costs relate to expenses such as the personnel division, payroll preparation, accounting, and procurement systems. Warning: many federal programs have an administrative cost cap. This is a limit to how much from an award can be expended for the management of the program. And why, you ask? Because the intent of the program is to serve students directly. Always be sure to check what is allowed, including the percentage for total administrative costs for programs under the Every Student Succeeds Act. Specific programs or awards may specify what percentage may be charged to direct or indirect administrative costs. Even when you think you have a good understanding of direct and indirect costs, you may find yourself questioning some administrative and clerical costs that fall into a gray area, if you will. Grant guidance tells us that salaries of administrative and clerical staff should normally be treated as indirect costs. However, there are instances where they may be deemed direct costs. This situation can occur when all four conditions on this slide are met. First, the administrative and clerical services are integral to a project or an activity. Next, the individuals involved can be specifically identified with the project or activity. Also, such costs are explicitly included in the budget or have prior written approval of the federal awarding agency. And last, the costs are also not recovered as indirect costs. There is no double dipping allowed. So we learned that indirect costs are agency-wide general management expenses. They support the implementation of the program grant or the award that cannot quite be directly attributed to the grant. General management costs consist of administrative activities necessary for the operation of the LEA, such as accounting, budgeting, the cost of the personnel division, payroll preparation, purchasing and procurement systems, and centralized data processing, as mentioned in a previous slide. Indirect costs are more global in nature. They can also be things that you can't see or that aren't tangible, such as the lights or the air conditioning used in the room during the time your federal award program is functioning. An indirect cost rate is the percentage of an organization's indirect cost to its direct cost and is a standardized method of charging individual programs for their share of indirect costs. An estimate of indirect cost is reserved at the beginning of the year and then trued up at the end of the year based on how much funding was actually expended from the federal award. The California Department of Education calculates the indirect cost rate for each LEA as authorized by the U.S. Department of Education. The first link listed on this slide takes you to the webpage with the spreadsheet that lists all of the LEAs in the state and their indirect cost rate. Procedure 915 in the California School Accounting Manual, also known as a CSAM, provides comprehensive instructions related to the indirect cost rate for those who deal with the LEA's budget most intimately. Now, nevertheless, it is a good resource for those on the program side to have downloaded, link provided here as well, to understand what and how accounting principles and procedures are handled in California schools. In all, remember that each LEA has an indirect cost rate it must adhere to for its federal grants and awards. Each LEA rate is different and varies by school year. The list provided by CDE and the CSAM are good resources to have handy. Now, it's important to know the legislative cap on administrative costs for federal programs that is defined specifically for the award or grant, especially if it's more restrictive in a particular state, such as with California. In the case of Title I, Part A, California Code 363001 specifically states that LEAs will spend no more than 85% of funds received from specific categorical programs, including Title I, Part A, at school sites for direct services to students. Maximum allowable for administrative costs, including indirect costs, is 15%. Although the 85-15 rule in relation to Title I, Part A is not federal law, it is California's law. And it's always a good idea to take a look at the federal programs you are in charge of to identify the maximum administrative and indirect costs that can be charged to the program. This 85-15 rule is different than the 85-15 rule related to the carryover in Title I, Part A. Just to make things more confusing, there are two different rules with the same 85-15 reference. And lastly, we have centralized services. A centralized service is a term generally used in relation to Title I, Part A programs. A centralized service is an activity funded by a school allocation but administered by the LEA's central office, sometimes called the district office. And even though the services may be directed by the LEA and possibly housed at the central offices, the services are provided directly to the students at the school site. Centralized services may be direct services or administrative in nature, and usually this is used in Title I, Part A as a reference to direct services provided by the LEA to the school. It may even be provided from a district reservation, but it may also be provided through the school's allocation. But please note, if it is a part of the school's allocation, it must be approved by the school's school site council and included in the school plan for student achievement. Okay, so this concludes the cost allocation terminology section. Having a mutual understanding of what these terms mean in a federal context is critical for both fiscal and program personnel. This mutual understanding establishes the necessary cohesiveness and alignment so that your LEA adheres to the operating requirements of federal awards. Up next, Helen will discuss federal timelines.
Thank you, Anita. Good morning, everyone. In this section, I will be discussing federal timelines and availability for federal funds. So let's delve into timelines associated with state and federal funds. It's essential to understand these timelines. Typically, state programs do not have a deadline for spending funds or carryover limitations. The funds in these programs can roll over, especially in the case of ongoing programs. There are exceptions with the state programs when they are created through legislation with specific requirements and legislated time periods. Another crucial point to remember, particularly concerning state funds allocated under LCFF, is that any funds budgeted to increase or improve services for English learners, foster youth, and low-income students must be carried over to increase or improve services for the same groups of students in the following year. Importantly, this requirement does not limit the amount of time that LEAs have to access the funds. This ensures that the resources are consistently directed to enhancing educational outcomes for those students. In contrast, federal funds, unlike most state funds, have defined spending timelines, referred to as the obligation period. For most federal programs, the obligation period spans 27 months, which places a clear limit on when these funds must be committed to their designated purposes. In addition, it's important to note that Title I is unique among the federal programs as it imposes a carryover limit, necessitating that the LEA spend at least 85% of the funds in the first year. Remember what Anita said, not to be confused with that 85%. For all other state and federal funds, the full 27-month timeline is available for committing 100% of the allocated funds. Understanding these timelines is crucial for effective planning and resource allocation. An LEA is entitled to access Title I Part 8 funds for full 15 months period before the limitation on carryover fund applies. Please note that September 30th is the end of the federal fiscal year. The federal requirement is that funds should be obligated by September 30th. We'll discuss what obligation means later in this presentation. And now typically you might wonder why we have 27 months to spend federal funds. The reason is that this extended timeline is forward funding. This means that even though the funds are appropriated in the fall, the clock doesn't start ticking until following spring when the LEs gain access to the funds. So in essence, you have the money available for 1 year, but thanks to the Tidings Amendment, you actually have an extra year. It's important to highlight the difference between the federal fiscal year and the state fiscal year, which resulted in an extended 27-month period instead of the standard 24 months. This is all due to first in, first out method, which plays a crucial role in this process. So, an LEA is allowed to carry over a portion of their allocated Title I funds from one fiscal year to the next, as this amount must not exceed the 15% of the total Title I funds designated for the LEA in that fiscal year. It's important to note that this 15% limit does not include any funds carried over from the preceding year. CDE may grant a waiver of the 15% limitation, but once only every 3 years. If an LEA wishes to apply for such a waiver, they can do it through the Winter Consolidated Application process. The reason behind this limitation is to ensure that the funds allocated for a specific year are primarily used to benefit the students from the same year. This practice helps maintain a focus on current educational needs. And remember, the 15% LEA limitation for Title I is all about making sure that this year's funds are spent for this year's students. Unspent Title I Part 8 carryover funds, as long as they are not or below allowable 15% threshold, remain accessible for obligation by the LEA for an additional fiscal year in accordance to SS Section 1127A. These unspent Title I Part 8 funds can include funds reserved for specific purposes but were not utilized, funds retained for LEA-wide direct student services, funds allocated to a specific school or schools. So, as previously mentioned, there's a federal period of availability with a 27-month window for Title I Part A funds. We've also learned that the minimum percentage of funds that an LEA must expend or obligate each year by September 30th is 85%. And that amount of the funds that may, and the amount of funds that may carry over for 1 year is 15%. So let's take a look at the example on the screen. In this example, if the LEA totals a total 24-25 allocation was $1 million, then the minimum amount to spend or expend to obligate by September 30th is $850,000 or 85% of those $1 million. The amount that the LEA may carry over to expend and obligate for additional 12 months will be $150,000 or 15% of the same $1 million. Please note that the 15% carryover limitation does not apply if the LEA allocation, including funds transferred in and from other federal education programs, is less than $50,000 for the fiscal year. So now then let's talk about Title I Part A carryover. LEA complete the Title I Part A carryover data collection from the CONAP during the winter release to report expenditures and obligations through September 30th. Once the expenditures and obligation amounts are entered into the form and the form is saved, The system calculates the carryover dollar amount and the percentage. If the LEA has a carryover greater than 15% and is eligible to apply for a waiver, the waiver request section will display in the Title I Part A LEA carryover form when the form is saved. So let's look at the eligibility timeline for a sample waiver carryover limitation. So if, for an instance, the LEA waiver for the carryover was granted and approved during the 21-22 fiscal year, the next opportunity for the LEA to apply for such a waiver will be in the 24-25 fiscal year. This is because the State Board of Education has the authority to waive the carryover limitation once every 3 years. So on a side note, it's important to note that the Title I Part A LEA carryover data collection form must be completed during the CARS winter release by the dates published in the CARS office. So when it comes to equitable services for private schools in accordance with ESSA, funds should be used in the current year, and any carryover for equitable services needs to be used for equitable services the following year. There may be extenuating circumstances in which the LEA is unable to obligate all funds within this time frame in a responsible manner. Under these circumstances, the funds may remain available for the provision of the equitable services under the respective programs during the subsequent school year. In addition, in determining how such carryover funds will be used, the LEA must consult with appropriate private school officials. It's worth noting that if the district exceeds the 15% carryover limit and CDE subsequently reduces the allocation, this reduction cannot be subtracted from the amount reserved for equitable services. So it's crucial to ensure the timely utilization of these funds. Since we know that the funds have to be obligated by specific deadlines, let's take a look at when an obligation is made. This table shows when a state or subgrantee makes obligations for various kinds of property and services. The guidelines for these obligations are outlined in 34 CFR 76.707, which we've included a direct link to this regulation on this slide for your reference. Now, what you see in this chart is a breakdown of when a state or subgrantee needs to make these obligations for various types of services. This information becomes increasingly vital as you approach the end of the obligation period. Please note that these obligations vary for different categories of expenses. For example, if obligation pertains to personal services provided by a contractor who is not an employee, the obligation is made on the date which the grantee makes the binding written commitment to obtain the services. On the other hand, if it's related to travel, the obligation is fulfilled when the travel actually occurs. Why is this important, you might wonder? Well, these obligations count towards the amount that you've spent in a given year. This can help you manage your carryover or prevent you from exceeding the timeline for fund expenditure. Following the obligations, you typically have 90-day windows to liquidate the funds. So liquidate means to settle the bill. So when you have a binding agreement or contract to pay for services, the actual amount payment constitutes that liquidation, and this payment must occur within that 90-day period. So a little note about federal transferability. Please keep in mind under Title V of ESSA, LEAs have the flexibility to transfer funds, but there are some rules to follow. You can transfer funds between Title II and Title IV, or from these programs into Title I and III. However, it's important to note that while you can transfer funds into Title I and III, you cannot transfer funds out of these programs. Understanding the natures of the restricted funds is essential. Title I and Title III are the most restrictive funds, meaning they only allow funds to be transferred into them, not out. This information is documented in the CONAP. However, indicating in the CONAP that the funds will be transferred simply notifies the CDE of your intent. It does not initiate the actual transfer. When you decide to transfer funds, Remember that transfer must occur at the district level once the funds reach your district. Stating your intent in the CONAP is not the same as completing the transfer. For instance, if you plan to transfer Title IV funds into Title I, they will first arrive as Title IV funds, and it is up to the LEA to finalize the transfer and document it in the CONAP. This information is crucial, as some districts mistakenly assume that the transfer is automatic upon the indication in the CONAP. This misunderstanding can lead to issues like excessive carryover if the district does not execute the transfer. So, quick check, you have the question here. So before we close out this section, if my LEA applies for a waiver for 24-25 and was approved, which fiscal year would the next eligible year for my fiscal year would be the next eligible year for my LEA to apply for another carryover waiver? Can you place your answer in the chat? Awesome. Thank you so much. This is an amazing crowd here. We have 100%. Can we go to the next slide? That's right. If an LEA that received a waiver for carryover in 25, if they received an approval for carryover in the fiscal year 24-25, the next eligible year would be to apply for a waiver would be in 27-28 school year, fiscal year. So thank you so much. And this concludes my section. And now I'm going to turn it over to Rachel for federal cash management data collection.
Thank you, Helen, and hello, everyone. So as Helen mentioned, in this next section, we're going to discuss the federal cash management data collection, which is also known as CMDC. So the Federal Cash Management Data Collection System, or CMDC, it's a web-based data collection application for LEAs to report federal cash management data for federal programs under the Every Student Succeeds Act, or ESSA. And so LEAs receiving Title I, II, III, and/or Title IV funds are required to report the cash balance for each of these programs on a quarterly basis to the CDE through the CMDC system in order to receive their apportionments for those programs. And so federal regulations, they require that recipients of federal funds minimize the time elapsing between the receipt and expenditure of federal funds. The CMDC system, it provides the CDE with the data needed to make apportionments based on the LEA's cash balance as required by these regulations. And so please note that only one CMDC report is submitted each quarter. The CMDC report will have a separate line to report the cash balance for each of the federal programs that the LEA participates in. And this reporting, it's usually completed by someone in the fiscal office. So the CMDC, it's important because the CDE will use the reported cash balance to determine the apportionment to release in each reporting period. And so the apportionment, it will be equal to 25% of the LEA's annual program allocation minus the cash balance that it reported for that specific period. And so calculations will be done for each of the federal programs. Keep in mind that data submitted in the CMDC system, it does not affect how program allocations are calculated, only how much of the total allocation that the LEA will be paid each quarter. And the CDE sends out apportionments approximately 1 month after the closing day of the preceding reporting window. So there are 4 reporting periods for the CMDC. And so the deadline for the next reporting period, you can see that it's coming up in January. LEAs must submit cash management data each reporting period to be eligible to receive funds in that period. And the data, it must be submitted by midnight on the reporting deadline, and the CDE does not accept late submissions. So if an LEA does not submit a CMDC report for that specific reporting period, the CDE will not apportion funds to that LEA for that period. And the LEA would have to wait until the next reporting period to submit the CMDC data in order to receive an apportionment. Also, please note that if the LEA has a cash balance of 0, a CMDC report must still be submitted in order to receive an apportionment for that period. So here we've included a few FAQs from the CDE. And so these FAQs are posted on the CDE's CMDC FAQ webpage. And so it provides a lot of helpful information about this reporting. And so these next 2 slides include a few FAQs. So what cutoff date should be used for the cash balances? It's recommended that LEAs submit data as close as possible to the reporting deadline because cash balances may be lower at that time, and this will maximize the amount of funds that the LEA receives in the next apportionment. Also, what if the LEA's cash balance is negative? A negative cash balance should still be reported because it will result in the LEA receiving an apportionment of 25% of the entitlement plus the negative amount. Okay, so here we have a few more FAQs. So what if the system says there is a submission error? In this case, you'll want to double check that you've included only numeric characters in the submission, as non-numeric characters will trigger an error. The only exception to this is the negative sign. And how will you know if the data has been successfully submitted? So once you submit the data, a data submission report will appear on your screen. This will include the data submitted, the date and time of the submission, and also the name of the person who submitted the data. And so you can print or save this information for your records. And so there are other FAQs listed on the CDE website, and so you can access the full list of FAQs at the link provided at the bottom of the slide. So here we've also included a few other CMDC resources for your reference. And so you'll see a link to the logon page and then also the instructions for reporting this data. In addition to the CMDC reporting, all LEAs receiving federal advances are required to calculate, report, and remit interest earned to the CDE. And so interest must be calculated and reported to the CDE on a biannual basis by email, and the information reported must specify the amount of interest due or 0 if there is no interest due. And the CDE recommends that LEAs wait until their final biannual reporting and calculation for the fiscal year to remit the interest. The interest due on federal cash balances should reflect the actual amount of interest earned on the unspent federal program advances. And then just as a reminder, LEAs are allowed to retain up to $500 of interest earned each year in total for related administrative expenses. And so keep in mind, this is $500 in total for all federal programs and not $500 per federal program. So it's in total. And so we've also included a few helpful CDE web links on this slide for your reference. And so lastly, here are a few things to consider to ensure that this reporting is completed on time and accurately. So how are program and fiscal staff tracking spending at the district level and at the school level? Who completes the CMDC reporting and who ensures that the reports are accurate? Also, who is checking to make sure apportionments are coming in on time? And very important, what communication systems are in place to ensure communication between program and fiscal staff? And then lastly, who is calculating, reporting, and remitting interest earned on federal funds? And so that concludes this section. So next I will turn it over to Laurel.
Thanks, Rachel, and good morning, everyone. Now we're going to share some information about internal controls. With internal controls, we examine how systems in your LEA work to ensure you're following legal requirements and being responsible stewards of public funds. Both state and federal audits and monitoring are based on recipients having effective systems of internal control. Broadly speaking, internal controls ensure that LEAs are able to provide assurance that the federal or state award is being managed according to the conditions established and being used for its intended purpose. Internal controls serve as the first line of defense in safeguarding assets. Internal controls help managers achieve desired results through effective stewardship of public resources. An internal control system is a continuous built-in component of operations that provides reasonable assurance that an entity's objectives will be achieved. Systems of internal control embody ongoing monitoring and evaluation and include procedures for prompt action in instances of non-compliance. The purpose of internal controls is to ensure an agency meets program objective and implements federal programs in compliance with legal requirements by assessing potential risks. And these risks are specific to the LEA. District systems should work to prevent, detect, and correct any fraud, waste, and/or abuse. Policies and procedures related to internal controls should be evaluated periodically to ensure that they prevent. This requires systems in place that immediately address potential issues of fraud, waste, and abuse. Detect. For this, the system works to identify any potential issues of fraud, waste, and abuse. And, of course, correct. Once an issue of fraud, waste, or abuse is detected, how is it addressed, and how is a subsequent issue prevented? We are provided with numerous resources to support establishing effective systems of internal controls. The Government Accountability Office provides such guidance in the publication shown and linked on this slide titled Standards for Internal Controls in the Federal Government. Standards for Internal Control in the Federal Government, known as the Green Book, set internal control standards for federal entities. However, this is also information to support recipients of federal funds, such as LEAs, to establish and maintain their internal controls. The Code of Federal Regulations requires that non-federal entities maintain controls that do the following: comply with the U.S. Constitution, federal statutes and regulations, and the terms and conditions of federal awards, which are the assurances we commit to in the CONAP and the federal addendum. LEAs must also evaluate and monitor compliance with statutes, regulations, and the terms and conditions of federal awards. And as mentioned several times before, we must take prompt action when instances of non-compliance are identified, including non-compliance identified in audit findings. The structure of internal controls from the aforementioned guidance details 5 interrelated components of internal controls. The first is control environment. As the foundation for an internal control system, control environment provides the discipline and structure to help an entity achieve its objectives. Then we have risk assessment. This assesses the risks facing the entity as it seeks to achieve its objectives. This assessment provides the basis for developing appropriate risk responses. Then we have control activities. The actions management establishes through policies and procedures to achieve objectives and respond to risks in the internal control system. which includes the entity's information system. With monitoring, procedures need to be established to assess the quality of performance over time and promptly resolve the findings of audits and other reviews. Finally, information and communication. Effective communication and accurate information are essential to support the internal control system. The system is a bit like the cycle of inquiry or the plan, do, study, act. It is settling up processes to work efficiently and effectively and to monitor the work and adjust regularly. The Code of Federal Regulations requires that we not only establish and maintain internal controls, but that we document that work. A link to the relevant section is included here. The work is executed by the LEA's oversight body, by management, and other personnel who are responsible to ensure that the objectives of the district will be achieved. There are three broad categories of internal controls: operations, which measure the effectiveness and efficiency of the system. Reporting looks at the reliability of documentation that are present for internal and external use. And of course, compliance. And compliance addresses applicable state laws and regulations. There's likely already a system in place. Therefore, our work relative to evaluating internal controls begins with assessing risks the LEA faces and, if needed, designing additional procedures to mitigate those risks. Every LEA is different. You know your district and any practices that may put you at risk. For example, if there has been a lot of turnover in the central office, some practices and policies may have been lost in the shuffle. And newly added to the Code of Federal Regulations is that LEAs must implement cybersecurity controls and other measures to safeguard information, including personally identifiable information and other sensitive items. So, how does all of this work together for an LEA? In the next two slides, there's practical information and actions that will support developing strong internal controls. This starts with understanding what internal controls are and what they are not. Make sure your work is aligned with requirements and not adding additional stress, burden, or undue complexity. Management establishes the internal control system. Employees must know and understand what their responsibilities are, how their actions contribute to and affect the overall system, and their discrete duties. It's important to standardize your process, follow procedures, and of course, document operational activities. Knowing what to do is great, but with documents outlining the actions, that knowledge becomes open and transparent to all. It's important to have personal ownership. Managers must take responsibility for their role and communicate any challenges. It's a group effort. Everyone is responsible for implementing strong internal controls in their daily work. At all levels, the roles and responsibilities contribute to the efficiency and effectiveness of the system. Value means creating meaning and purpose in work so that executing the process is ingrained in staff culture and not viewed as something additional or burdensome. Continuing with this structure, it's important to establish responsibility. Know who's responsible for doing what. Key tasks need to be assigned and followed up on. Segregate duties means creating a check and balance system to avoid theft, fraud, or improprieties. In a smaller entity, greater challenges might be faced in segregating duties because of its concentration of responsibilities. It's important also to restrict access. Access should be given only to those who need to complete assigned duties. Document procedures and transactions and always retain documentation, whether it's electronic or manual. Independently verify by corroborating information. It's always good to have an external perspective to ensure that systems are working. We've also linked on this slide a self-assessment checklist that is available in our Fiscal Basics Handbook as well. So to sum up internal controls, consider yours as in terms of how they have functioned over the preceding year. What worked, what didn't, and why? How effective is your system? How well does each employee understand their role? How are the internal controls set up to prevent, detect, and correct? I'll continue here with this section as we delve into the role of policies and procedures, which are essential for establishing robust internal control systems that safeguard resources, ensure compliance, and promote accountability. Having compliant policies and procedures is essential for administering programs that are in line with grant management guide requirements. They ensure that programs remain compliant by establishing a structured framework, by defining how programs should operate and why they need to follow specific requirements. Policies and procedures guide organizations in fostering a compliance-focused environment. In this framework, policies explain why something is done by setting standards, while procedures describe how to accomplish tasks by outlining specific steps. Together, they operationalize internal controls and clarify how the local educational agency will implement oversight for federal programs. According to federal government standards for internal controls, these requirements are foundational for effective program management. So let's take a closer look at what differentiates a policy from a procedure. Policies reflect the organization's goals and directives and are typically set by management to communicate desired outcomes to employees. Policies establish a high-level approach for various areas, such as time and effort reporting or allowable expenses. While some policies may require board approval, others are decided at the cabinet or administrative level, depending on the LEA's needs. Procedures, on the other hand, are specific methods used in daily operations to ensure these goals are achieved. They provide step-by-step instructions on how tasks should be performed and designate who is responsible for each part. Unlike policies, procedures generally don't require board approval. It's crucial to tailor procedures to your LEA's unique structure and processes rather than adopting generic templates, as they should specify exactly who will do what and how tasks will be tracked for completion. It's a good idea to review what policies and procedures would be required for a federal program monitoring review to ensure that they are current. In summary, policies outline what and why, setting standards and goals, while procedures define how those goals will be met in more practical terms. Administrative requirements include policies and procedures that reflect cost principles and audit requirements for federal awards. This includes, but is not limited to, the list on this slide. The policies and procedures are critical for LEAs when managing federal funds. They may already be established within your fiscal office, as many have been standard for some time, though requirements may have evolved. Familiarizing yourself with these, particularly in areas such as cost allowability and procurement, ensures you understand your role in maintaining compliance. It's important to determine whether everyone who's accountable for carrying out policies and procedures is aware of what is expected. Next, we'll review a few of these policies and procedures in more detail. Creating a friendly and effective procurement policy helps everyone understand how to purchase goods and services, award contracts, and work with vendors. Here are some key topics for LEAs to consider. For contract awarding and hiring, ensure that everyone knows how contractors are selected and awarded contracts. Clear procedures help avoid conflicts of interest, especially if someone has a personal connection to a vendor. By having transparent criteria, LEAs can make sure everyone gets a fair chance. For micro purchase requirements, when making smaller purchases, you should aim to use various suppliers. This helps avoid conflict of interest. If you find yourself always going to the same vendor, it's good to ask why and document how those decisions are made. For quotation and bidding processes, for smaller purchases, try to get quotes from at least 2 vendors. For larger purchases, having a formal bidding process, whether open or sealed, is essential. If you ever need to use a sole source vendor, document the reasons why and document the criteria used to make that decision. Contract administration and verification. Before making payments, double check that the work done meets the expectation and contract terms. Everyone involved should confirm service delivery before approving invoices to avoid any payment hiccups. For conflict of interest, it's important to have guidelines that help prevent conflicts of interest when choosing vendors. Make sure everyone involved in the selection process knows how to check for personal relationships with vendors, ensuring that decisions are fair and unbiased. And finally, to avoid duplicative or unnecessary purchases, it's important to prioritize being good stewards of public resources. Check the existing inventory before making new purchases. This helps avoid purchasing unnecessary items and keeps the resources efficient and aligned. For allowability purposes and procedures, LEAs typically follow a structured process aligned with federal regulations and specific program requirements. The assessment criteria are based on the principles outlined in 2 CFR Part 200, which include the reasonableness of the cost, its allowability to the program, consistency and treatment across both federal and non-federal funds, and the necessity of the cost for the program's effective operation. Decision-making is a collaborative effort involving program staff who ensure that costs align with program objectives, fiscal staff who assess financial implications and compliance, and leadership or administrative teams who provide final approval based on recommendations. Clear communication of decisions is crucial and achieved through regular meetings among site, district, program, and fiscal staff. It's also important to maintain written records of the determinations made, including the criteria and reasoning behind every decision. This process and related elements should be documented in the district's policies and procedures regarding cost allowability, serving as a reference to ensure consistency and transparency across the district. A list of questions in this slide and the next was compiled by the Wisconsin Department of Education. It can serve as a helpful guide for determining cost allowability in federal programs. It's also included in our Fiscal Basics Handbook that has been mentioned several times today. Considerations for allowability include who is responsible for creating the budget for the federal programs. It's important to understand how this collaborative effort unfolds between the fiscal office and program staff to ensure alignment. Additionally, identifying who verifies the allowability of each cost under both the federal program and the Uniform Grants Guidance is crucial. This responsibility needs to be clearly assigned to prevent any miscommunication about what costs are allowable. When changes to costs occur within a program, it's vital to have a clear notification process in place. For instance, if someone in the business office modifies a cost without proper communication, this can lead to non-compliance issues. Establishing who should be informed when changes occur and ensuring that the appropriate personnel are notified are essential for maintaining compliance. Remember, when cost changes are identified, a timeline for submitting budget amendments should be outlined detailing who is responsible for generating supporting documentation to demonstrate that costs are reasonable, necessary, and allocable. It's important to specify where this documentation will be stored and who is accountable for maintaining it. Additionally, understanding whether staff are working on single or multiple cost objectives is another critical aspect. Determining who makes that call and how that is communicated can help avoid confusion down the line. Lastly, policies should include processes for supporting the amount budgeted, as well as mechanisms for verifying the accuracy of these costs. By addressing these questions in your policies on allowability, you can foster clarity and ensure compliance. For time and effort, LEAs must establish written policies and procedures for documenting the time and effort of employees who work on federal programs. These documents should outline specific practices for recording actual hours worked, including related internal controls and procedures. Additionally, the policy should address employee training, reconciliation processes, deadlines, and the authority responsible for oversight. For detailed requirements on documenting time and effort, refer to CFR Section 200.430 of the Uniform Grants Guidance. This section provides comprehensive guidance on the necessary documentation and compliance compliance measures that LEAs need to follow to ensure accurate reporting and adherence to federal regulations. During day 2 of this Fiscal Basics presentation on Wednesday, we'll go more in depth with time and effort. And finally, do your policies and procedures reflect the current context? Are your policies and procedures prepared for emergencies? It's essential to review and update your policies and procedures to align with the current reporting processes. We all know that any emergencies, big or small, can happen at any time. In order for costs to be allowable, they must adhere to the LEA's written policies and procedures for compensating employees under expected or extraordinary circumstances. Additionally, costs must be equitably allocated to all related activities and funding sources, including both federal and non-federal resources. Regularly revisiting and refining your policies will help ensure compliance and preparation for any future emergencies. And with that, I'll hand it back over to Adrienne, who will wrap things up for today.
Great, thank you. So now we're at the end of day 1. And so if you have any last minute questions, by all means, please place them in the chat. We will take a look at that and compile our Q&A. We want to remind you again that our fiscal training part 2 will be next Wednesday, December 10th, same time, 10 o'clock to 11:30. And the topics that we will cover are time and effort reporting, maintenance of effort, comparability of services, supplement not supplant, equipment and contracts, and again, my personal favorite, federal program monitoring. So again, we want to thank you for joining us today. We want to wish you a happy day and a good weekend, and we'll see you next week.